We all know that sound as we approach 4 p.m. here on the East Coast. The closing bell at the New York Stock Exchange as rung in by Vizio. A lot of happy faces there, but let's really getting that hammer down. Let's take a look at where the numbers are settling here this Monday afternoon. The Dow Jones closing the day relatively flat, pulling back about 55 points or so. The S&P 500 and NASDAQ also ended the day relatively flat. Let's see why that is. Ted Rossman joins us now. He's a senior industry analyst at Bankrate. So tell me, in your view, there's a lot of data points to consider, but what's really driving the market as we kick off the week today?
Markets were pretty flat today, as you mentioned. I think the biggest report everybody was looking at was that Fed senior loan officer survey, which is often a fairly arcane corner of the credit world, but not right now because everybody's worried about bank failures and a possible credit crunch. I thought this report was not so bad. A lot of people were kind of bracing for the worst and our banks dramatically pulling back. I didn't see a dramatic pullback. I feel like there is continued modest, I would say, tightening of credit standards, but nothing too dramatic. I think markets took it in stride. Now attention will turn to a couple of key inflation reports later in the week, the consumer price index on Wednesday and the producer price index on Thursday.
And Ted, I will say the thing that is concerning of all the data points we've kind of just thrown out is this new survey from your company, Bankrate, finding that more than half of Americans feel money stress has a negative impact on their mental health. I don't wonder why that is, but it's a really significant number. How does it compare to previous years, and what does it mean for all of us?
It's a 10 percentage point jump from last year.
Wow.
And the worsening is really driven by inflation, which is really just the key economic theme of the year, basically. And everybody's stressing about these higher prices and worried about how they're going to pay for day-to-day expenses, how they're going to save for the future. I think it's really all related. And it actually reminds me of something that Fed Chair Jerome Powell has been talking about, because obviously there have been some consequences to the Fed's rate hikes. It was a key factor in some of these bank failures. It's causing people to pay more for borrowing, potentially slowing the economy to the point of recession and people losing jobs. I mean, there's a lot that people are worried about, but I think what Powell points out correctly is that inflation is hurting everybody. So the Fed has a tough job. They're trying to bring inflation down without creating a recession and without pushing many, if any, people out of work. I actually think of late, we've had some positive data that maybe makes the so-called soft landing hypothesis a little more realistic. But people are feeling this at the household and at the pocketbook kind of level.
And it puts into human context all these numbers and colors and graphs, right? There are real physical human consequences to everything we're discussing. I'm curious about your survey, though. What were the top financial concerns reported driving down people's mental health? What's at the top of the list?
Inflation was at the top of the list. And then connected to that were things like not having enough emergency savings and having trouble paying for day-to-day expenses. So I really think that if we look at the top of the list, it's really dominated by inflation and what I would call adjacent themes. Basically, people feel like their paycheck's not stretching as far, and they're absolutely right. I mean, the fact that we have one of the best job markets in a half century is totally lost because inflation is eating up people's wage gains. And that's really what people are worried about.
And another great reason to just save in a boring, mundane way. Now you can make the point that it's for your mental health. Ted Rossman, great to chat with you. Thanks for being with us today.
Thanks for having me.